Welcome to the Deep Dive. Today, we're tackling Johnson & Johnson, J&J, a company that's, well, pretty much synonymous with stability, right? A real household name.
Absolutely. Everyone knows them.
Yet its stock performance lately, it tells a kind of surprising story, almost counterintuitive.
Yeah, it's definitely raised some eyebrows.
So our mission for this deep dive is really to extract the most important nuggets of knowledge from the financial article we've been looking at.
Right.
It details J&J's stock movements, its future outlook,
Right.
and we want to help you, our listener, understand if J&J is still, a valuable stock.
Yeah.
Especially if you're seeking those steady gains.
Mm-hmm.
And here's the really fascinating contradiction we're going to try and reconcile. Despite a recent dip in its stock price, the company itself just raised its sales outlook for the year.
That's the puzzle, isn't it? Performance going up, stock, not so much.
Okay, let's try to unpack this then. When we look at J&J's stock performance, say post-COVID-19, the typical steady gains investors kind of expected.
They just haven't really been there.
Exactly. As of Tuesday, July 15th, shares were actually down 7.5% year-to-date.
Wow, yeah.
And about 17% below their all-time high set back in 2022. I mean, that's a pretty significant dip for a company with J&J's reputation for, reliability.
It really is.
So what's truly going on behind that headline number?
Well, what's fascinating here, as you said, is that this stock price movement, it doesn't quite jibe with the company's actual operational performance.
Right.
Just before the market opened on July 16th, management actually raised its sales outlook for the entire year.
Raised it.
Yeah. It's a pretty stark contrast. It immediately highlights why you got to look beyond just that headline stock price.
Good point.
And, if you're an investor, it's really crucial to remember the 2023 spinoff.
Ah, yes, Kenvue.
Exactly. Shareholders received new shares of Kenvue, which that was J&J's consumer health division.
Right, Band-Aids, Tylenol, that side.
That's the one. So if you're looking purely at the J&J stock chart now, well, it might be a bit misleading if you don't factor in those Kenvue shares you received.
Okay, that context is key.
It is. And another key point for shareholders, back in April, J&J raised its dividend payout for the 63rd year in a row.
63rd year. I mean, that consistency is truly remarkable.
It's pretty staggering.
From an investor's perspective, what does an incredible dividend streak like that truly signify about J&J's financial health?
Yeah.
And what are the latest details on that playout?
Well, that kind of longevity and dividend growth, it just speaks volumes, really, about a company's financial discipline, its long-term commitment to shareholder returns.
Sign of real stability.
Definitely. And to get specific, the latest increase was a 4.8% raise. That brings the quarterly payout to $1.30 per share.
Okay.
And at recent prices, this works out to about a 3.08% dividend yield. It certainly makes you pause and think, get the complete picture beyond just the daily stock price swings.
Okay, yeah, that's a powerful combination. A company raising its sales outlook and a dividend streak like that, yet the stock price is softened. So
yeah.
With these figures in mind, what are the core reasons some smart investors are now looking at J&J as maybe a potential buy? What's the hidden opportunity here?
Well, I think it largely comes down to a really monumental decision J&J made. They've fundamentally reshaped their identity.
How so?
They strategically shed that familiar consumer health division.
Yeah.
The Listerine, the Q-tips we mentioned.
Got rid of it.
Yeah, to sharpen their focus entirely on, the high-stakes world of drugs and cutting-edge medical technology.
So pharmaceuticals and MedTech, that's it.
That's it. This wasn't just like a simple divestiture. It was a really bold reinvention, betting on concentrated power, essentially.
Interesting.
And this new sharpened focus, it now makes mid to high single-digit percentage overall sales growth over the long run seem genuinely likely.
Okay, that's a huge strategic pivot. And thinking about the pharmaceutical segment specifically, there's been a lot of talk about Stelara. That's a big one, right?
It was, yeah.
Yeah?
Blockbuster treatment for psoriasis and Crohn's disease.
And it recently lost its patent exclusivity. So how significant is that loss to J&J's overall drug portfolio, especially given this new focus?
Yeah, that's a great question. And what's crucial here is that while Stelara did lose its patent protection, it actually now accounts for less than 7% of total revenue.
Oh, less than 7% now?
Yeah. which makes overcoming losses to biosimilar competition, the cheaper generic versions hitting the market much, much easier than it would have been, say, a few years ago.
Okay, so maybe not the catastrophe some might think.
Exactly. And this isn't just about managing losses, though. It's really about the strength of their new product pipeline. They're actively filling that gap.
And it sounds like that pipeline is pretty robust. What are some of the standout new products or clinical trial successes that are really driving this optimism?
Right. Yeah, there are some strong examples. Take Spravato, for instance. It was FDA approved last year for treatment-resistant depression. And its sales, well, in the first half of 2025, they jumped a remarkable 48% higher year over year.
48%. Wow.
Yeah, up to an annualized $1.5 billion run rate. Then there's Caplyta.
What's that one?
It's a treatment for schizophrenia and bipolar depression that J&J actually acquired back in April.
Ah, an acquisition.
Yeah. And J&J has submitted an application that could make it a really popular treatment for preventing relapses of schizophrenia. It showed get this, a 63% reduced risk of relapse in a clinical trial.
63% reduced risk. That's huge potential.
Huge. That could translate to a really significant surge in maybe 2026. So you see, these aren't just new drugs. They're clear proof that J&J's strategic pivot towards high-growth pharma is, well, delivering.
Right. These successes are directly filling the void left by older drugs, like Stelara. It shows a potent revenue-generating pipeline.
Precisely.
And that's just a couple of examples. I think I read that in the second quarter alone, J&J reported successful clinical trial results for over a dozen compounds.
That's right, over a dozen. Highlights a really strong, deep pipeline.
So beyond pharmaceuticals, let's talk about their medical technology segment, or MedTech. That seems like a significant long-term growth driver.
Absolutely.
It kind of makes intuitive sense that MedTech IP lasts longer than drug patents. Are there specific examples or structural reasons that make that durability so robust?
Yeah, definitely. The intellectual property protecting medtech sales, it simply lasts much longer, partly because of the nature of medical devices, surgical systems.
More complex, longer development.
Exactly. Longer development cycles, different regulatory hurdles. It all adds up to provide more consistent, more predictable revenue streams over a longer period compared to drugs.
Okay.
And on top of that baseline durability, J&J is also investing heavily in, cutting-edge tech within medtech itself.
It's almost like they're building a multi-decade fortress with medtech, isn't it? What's new on that front specifically?
Well, a big development is they completed the first cases in a clinical trial for their Ottava robotic surgical system. That was back in April.
Ottava. Okay, is that a competitor?
Exactly. It aims to directly compete with Intuitive Surgical's Da Vinci system. And if it's successful, Ottava could be a really powerful growth driver for, decades to come.
A potential game changer in surgery.
Could be. And, even without Ottava's contribution yet, their second quarter medtech sales still rose by a healthy 7.3% year over year.
Solid growth already.
Very solid. And let's not overlook the massive demographic tailwinds here. Meaning aging populations, particularly in developed nations. That's going to drive consistent demand for things like cardiovascular interventions, hip replacements, areas where J&J is already a leader.
Right. Basic demographics working in their favor.
Absolutely. So continued growth at, roughly the present pace in medtech seems like a very reasonable expectation.
Okay, so considering everything we've just laid out, the strategic pivot, the pharma pipeline, the medtech strength, but also those patent challenges, how should we as listeners truly recalibrate our expectations for J&J stock? What's the realistic end game here? And maybe just as importantly, what should you not expect?
Yeah, that's the key takeaway, isn't it? If we connect all this to the bigger picture, pharmaceutical businesses are just inherently dynamic. It's the nature of the beast.
Things always changing.
Always. Their intellectual property, their patents, they don't last indefinitely. So you constantly have pieces moving in opposite directions. New drugs coming online, older ones facing patent expiry.
Right.
Stelara's patent loss, which we talked about, that's the biggest current challenge. It accounted for about 11.7% of total revenue in 2024.
Still significant, even if shrinking.
Oh, absolutely. And looking ahead, there's Darzalex. That's a multiple myeloma treatment.
Okay.
It's responsible for almost 15% of total revenue, currently 14.9%.
Right.
And its main U.S. patents, they expire in 2029.
So another cliff approaching in a few years.
Something they definitely have to manage.
So these ongoing and upcoming patent challenges, particularly with Stelara now and Darzalex later, they're significant. it probably means realistically you shouldn't expect overall sales growth at like a double-digit percentage over the long run.
That's probably too optimistic, yes, given those headwinds.
However, maybe a high single-digit annual percentage of forward movement.
Yep.
It still seems like a very reasonable expectation.
I think that's fair. High single digits feels achievable given the pipeline and the MedTech momentum, even with the patent losses.
Okay.
And, this really raises an important question for you, the listener. What are you looking for in an investment?
Right, matching the stock to the goal.
Exactly. If you're primarily interested in a dividend payout that grows steadily, reliably year after year, well, J&J could absolutely be a stock for you. That track record is hard to beat.
The dividend champion.
Right. But if rapid principal appreciation, meaning, a quick, dramatic jump in the stock price itself, if that's what you're after,
Maybe look elsewhere.
it's probably best to keep looking, yeah. J&J, especially post-transformation, feels like it's built for the long game, for steady, reliable growth and that consistent income stream.
Okay, so to quickly recap our deep dive into Johnson & Johnson, we've seen its pretty major strategic pivot towards higher growth segments, pharmaceuticals, and medical technology.
Yeah, a much sharper focus.
Backed by what sounds like a robust new product pipeline in both areas. But we also have to be realistic about the ongoing patent expirations that are just part of the pharmaceutical business model.
It comes with the territory.
Hopefully this information kind of shapes your understanding of a company you probably already knew, but perhaps not from this nuanced investment perspective.
Mm-hmm. And thinking about J&J's deliberate shift, how it's managing its legacy assets while investing so heavily in these future growth areas.
Yeah.
It kind of makes you wonder what other well-established, maybe even seemingly boring companies out there might be undergoing a similar quiet transformation, one that could really redefine their long-term potential.
Interesting thought.
And maybe more importantly, what signs might you look for to spot these kinds of shifts yourself before everyone else does?